Good morning, welcome. My name is Oskar Wikström and I work as an analyst at ABG. And welcome to Introduce Days. This morning we have the pleasure of welcoming Hanza, a manufacturing company, who will talk a bit more about their business and their prospects. I leave the word to you. Thank you.
Good morning. And thank you for coming for this presentation. So I'm Erik Stenfors. I am the founder and the CEO of this company, Hanza. And I realize that this might be a new company for some of you. We have not been participating here before. And therefore, I would like to start by giving you a quick glimpse of our company group. And it's best done, I think, through showing some of our customers. We are a manufacturing company, but we don't manufacture our own products. We do it on behalf of our customers. And you see a few of them on this slide. We do big things like the conveyors for metals and minerals in the bottom of the screen. It weighs a couple of thousand kilos, 12 to 15 meters long. We do mid-size products like the grain analyzer in the middle. And we do small things like the silver compasses up in the right corner. And we said if we are not going to focus on a certain segment, for us it's good to have a diversified customer portfolio. So you see we have customers in the mining sector, so in addition to Metso, we have Sandvik and Epiroc. We do have energy customers, ABB, Siemens. We have medtech companies like Getinge and GE. And we have the traditional industrial companies. The one you might have seen, we produce the salad bar for Piccadilly. That is in the supermarket. Also, we do recycling machines, which you might have seen if you are good enough to go back with your cans and your bottles. And we are a quite new company. We started in August 2008, and I think we all know what happened that month. It was the Lehman crash. But we survived, and we've been able to grow steadily. You see the graph to the right that the revenue per year has been growing. Last year, it was even accelerating. We had revenue of 1.8 billion SEK last year. And if we add also the acquisition we just made, we're up to 2.3 billion. So it's been a healthy ride. And why then the growth is accelerating at the end, I will come back to in a few minutes. We did an IPO. First, we went into the small market, First North. And then we were upgraded to the main market this year in March, to small cap. And I have about 2,000 colleagues in 20 production units all over the world. And we have grouped them together to something called clusters. And this is an important concept that I will come back to. We have 5 clusters. You see them on the map. It's Sweden, Finland, Baltics, Central Europe, and China. That's where we are located. Now, why would any of these market leaders you saw in the previous slide choose Hanza as the manufacturing partner? And how come we have been able to grow like this over these years when there also been some kind of financial difficulties? Well, the key is obviously in the business model, and we have developed a new way of manufacturing. And I'd like to go in more details about this. This will also show you where we are heading for the future. So I will talk a little bit about this, and then I will leave over to Lars Åkerblom, who is the CFO. And he will address this with some numbers, and you will also understand how about the latest acquisition, how that affected us. But let's start then with our business model. And to understand our way of manufacturing, we have to look at the traditional way. This is an example. Somewhere there is a product company. That is the company who has invented, developed, or are selling some product. Now it's getting more and more rare that these product companies actually have their own manufacturing. Instead, they use outside partners. So they use these traditional contract manufacturers. In this specific example, there is some final assembly, but they have outsourced the rest. They have one company in Sweden who is doing some machine parts, one in England for historical reasons, doing the electronics. And Poland, they do some modules, and they also do some cable harnesses in China. Now, this is a very simple supply chain. I can show much more difficult supply chains. This is the basic one. Still, it contains a lot of challenges for the poor CEO who might look like this. First, you have the internal problem. how much does actually this product cost? You might know what the electronic cost or the cable harness, but if you include everything, so you have the cost of supervision, you have the cost of the shipments back and forth. I happen to know that one of the challenges that they have in the factory in Sweden is that the cable sometimes is too short. So they have to send back this module to Poland, and then Poland has to do a claim report to China. And all this cost, of course, the customer must carry. Which is also the disadvantage number 2. We all talk about the Greta effect. And we have invented a new word in Swedish, flygskam, whatever that is, ashamed of flying maybe. Maybe we should be that, but how about these parts and the components? They are traveling several kilometers before it ends up to a product. So not good for the environment. Flexibility, what happens if you want to have double amount of units, you want to increase, you have a breakthrough somewhere, then you have to call all your suppliers and ask them to double the capacity. Not that easy. And now we are talking about the internal challenges. Then we have the external challenges. And these are the trends. We know now there is a war going on between China and US. What happens if that escalates? If there are trade barriers from China, you might need to relocate the cable harnesses. If Boris Johnson if he makes this no-deal Brexit 1st of November, not only will you have to pay more to use England, but also you will add administration. And also, the world is global. So there is an ever ongoing fight for lowering the cost. Now, if you cannot even measure how much it really costs, how can you trim it? So a lot of challenges in this supply chain. And that's why we decided to do something new. So we invented a company named Hanza with a very simple idea. What if we gather different kind of manufacturing technologies in one company? By tradition, these contract manufacturers have been specialized. They do one commodity. If we group them together and then use this word I used, cluster, so it's industrial parks. We do industrial parks with different kind of technologies. Then you can place your product there and you can have it produced with less cost, high flexibility, and less impact on the environment. So that was the basic idea. And just to show this with the example again, so if we would apply that solution for this, again, very simple supply chain, can be much worse, then the solution would look like this. This company in Sweden, which we are now talking to, would move to Hanza and have all these benefits. So that will be the whole idea. And that's also why we have the slogan, all you need is one. From the Beatles song, all you need is love. Now, it's very difficult to do something new. You like to do what you have done always. Here's another example. You see to the left, product company. It looks like a tilted Christmas tree. You see all the contract manufacturers below the product company. And now you talk to this product company and say that, okay, we have a suggestion. What if you move to us? You get all these benefits. You can reduce number of suppliers and all this. And then they say, but okay, we are focusing now on developing new products. We don't have control of our manufacturing chain any longer. We don't have the documents. We don't have the resources. So would we do this, then we have to reallocate some of the manufacturing. We really don't know how to do this. Then it will end with a good idea only. So to handle these cases, we invented also something called the MIG. Now something happens. We are not only selling manufacturing, but also we become consultants. We added a service called the MIG. It stands for Manufacturing Solutions for Increased Growth and Earnings, a way where we go in and analyze the customer supply chain and come up with a new solution. And then the customer will not just have a McKinsey report saying reduce number of suppliers, but it will also say how to do this. So you are lacking documents, you can do them, reverse engineering, we will tell you how. So you like to move some manufacturing, it can be done, we can tell you why, how. And we can show you all these things, which is the obstacles for going from A to B. So if there's one slide, I hope you remember from this presentation, it's this one. So the difference between Hanza and a traditional contract manufacturer, actually twofold. Number one, we work with these manufacturing clusters, the industrial parks. streamline manufacturing. And secondly, we also have advisory services. We sell knowledge to our customer, and this MIG is just one example. We also have another one called MCS, but that time doesn't allow to show all the services. But these are the two differences. Things take time. To build a company takes time, and you have to do it step by step in an orderly way. We have created Hanza through defined phases. So the first phase was that we collected. We wanted to get all these different kind of manufacturing technologies. These are our tools. So we collected those. Then we placed them in these 5 toolboxes, our clusters. That was phase number 2. And now we are in phase number 3, and that's also the reason why we are growing a bit faster now, as you saw on the graph earlier on. So this phase goes by the name Strategy 2022. And we have said we're going to do 2 things. Now Hanza already became the leader of a leading partner of manufacturing in the Nordic countries. So our customers are from Sweden, Finland, Norway. Now it's time to attack new countries. The challenge with this tilting Christmas tree is the same all over the world. So we like to add new countries simply. And secondly, we need to trim our clusters, because if we then receive new orders, we have to be more efficient ourselves also. So we have the traditional programs, robotization, automation, Industry 4.0. But in addition also, we are removing some of our customers. Some we got from acquisition, not really a good fit with our business model. So actually we are sometimes telling our customers that you should probably find one of the traditional manufacturers instead. So that's the program we are running right now. And it was because of this phase also we made an acquisition this summer. I don't know what you did this summer, but I was in Germany. It was hot, over 40 degrees. And we finalized a deal with a company named Ritter. A fantastic acquisition. It's a German manufacturer, 180 people located in Remscheid, just east of Düsseldorf. And that was the idea then, to have a new customer market. This is the 4th biggest economy of the world. Of course, we are interested. But in addition, they have a subsidiary in Czech Republic. And listen to this. We had already factories in Poland and Czech Republic. We had electronics and we had mechanics. And for some reason, they had just in between a factory with cable harnesses and complex assembly. What a perfect match. So we got this also in the acquisition. So it was 2 factories we bought. The sales of this company was about 43 million euro. They have a decent earning level of just about 10%. So we decided to pay a little shy of 2.5 times the EBITDA. So we paid 12 million euro, and we divided into 2 parts cash, 7.2 million euro, and then they got 3 million shares valued at 17 SEK each. So that's the latest news from Hanza. Now I will leave over to Lars to give some financials and also tell what does this acquisition mean for us.
Thank you, Erik. Based on the second quarter interim report, these are the figures, and I will come back to how it looks with the new acquisition included. But as Erik said, we have these different phases of Hanza where we now are entering into the growth sort of phase. And that is also affecting the result in the company. We are moving the clusters, and we have mature clusters in Sweden. We have less mature clusters in the rest of the world, and that is affecting the profitability. So we have a quite higher profitability in the Nordic compared to the rest of the world. And as Erik said, we are also changing some of the customers. We are also taking cost for this IPO, which is affecting the result in 2019 and also in 2018. What's important in this industry is the cash flow and keeping the balance sheet in shape. So we've been working quite a lot with the balance sheet and the cash flow, and that also gives us a possibility to do this kind of acquisitions, like the last one in Germany. We also did a smaller one in Finland in the beginning of the year, without placing the company into financial risk. So you can see that the equity to asset ratio is still quite strong, even though the IFRS 16 affected us quite heavily, since we are renting some of the buildings where we operate in. Looking into this fact, it also shows how the net debt compared to the EBITDA, how we've been able to reduce that even though we have expanded. So that's really important for us to work with the suppliers, work with the customer receivables, and reduce the net debt. And this 2019 is just taking the half-year figures and multiply by 2. And then we will show the acquisition of Ritter, how it looks. And it's quite a big acquisition for Hanza. We come from 1.8 billion Swedish crowns up to 2.3. And we also get a very good customer market for our Central Europe cluster. So you can see that with the 9 or 10% almost increase of shares, we will increase the EBITDA by 45%. So we think it's a good acquisition that will support the value of Hanza. Erik.
So just to summarize this presentation and also maybe answer the question, why should you buy shares in Hanza? Why do I own shares in Hanza? So the first thing is the business model. And now you know that we have 2 parts which separates us from the traditional manufacturer. It's clusters and the advisory services. The long-term perspective, it's really important to not build a company by the quarter or by the month. It takes years to build this. Every year should be better than the previous one. And now we've turned 11, and hopefully the coming 10 years will be even better than the first one. That's really important. The portfolio, I showed you that we have a diversified portfolio. So we try to get market leaders and also have them from different segments. It helps us a lot to grow the company. And then finally, maybe the most important, the potential, driven by 2 factors. So number 1, we now have 3 factors. We have the old Hanza, of course, growing. We have the foothold, the strong foothold in Germany, which gives us a huge new potential. And then we have the trends with Brexit and the globalization and trade barriers, which also helps us. So we look forward to a really bright future. And even though this was maybe the first time you heard about Hanza, I hope that you will continue to follow us, so we will have a chance to meet again sometime. Thank you.
Okay, well, we have time for a few questions as well. The first thing I was thinking was these clusters. So do you own all the parts, the entire cluster? And do you cover all areas of manufacturing technology, or are there anything that you're lacking today that customers need? And if so, why?
Yes, no, we are not done yet. So we own the factories. We don't have all the technologies in all clusters. We are still developing. You saw that this Central Europe cluster was enhanced by the acquisition. And the reason why we don't have everything in place yet is that this company is not ready yet. We are still under construction.
Okay, but you're still in a good position today to reach this growth goal that you explained here.
Yeah, the 2 phases. First phases were the most difficult. Now it's to simplify to say copy paste, but it's easier to do repeated action.
Yeah, understood. And another thing I was thinking, you mentioned here that you want to shift some customers, get rid of some old ones, get in some new, and trim the clusters. In terms of the growth trajectory, where are you capacity-wise today? Do you have the capacity to continue to grow, or do you think that you will continue to invest more and more in order to follow this growth trajectory that you have?
So we have a number of actions. So of course we must also all the time be more efficient. We have different degrees of automation in our group. The good thing is that you can learn from each other, so you can have master units which can help the other ones to become better. So that's one way of increasing the capacity. We do have some surplus capacity in Central Europe. We've been building that for a couple of years. In some other areas we need to have more automation. So it's a mixture when you look at the group. But we have for our target of 10% per year, that we have capacity for.
Understood. And in terms of acquisitions, so this recent acquisition as well, how do you think about that and how do you manage them? Are they decentralized largely? How do you reach synergies within the group of these acquisitions?
That's been a very important rule since we started Hanza, decentralization. So the factories are the atoms, and then we make molecules that are the clusters, and then the whole body. But people are allowed to make their own decisions on factory level, and we run it by KPI, and of course we have a matrix organization, so we can do the financial reporting and have the same culture by HR and so. But it's very decentralized.
Okay, understood. And another thing, you mentioned that, well, it's very well diversified and you have lots of customers in different segments, but it seems on the picture here that maybe, well, that there is a lot of more industrial and more cyclical end customers. Could you comment a bit on how you see the cyclicality within Hanza?
Au contraire, I don't think I mean, we have cyclical business, but they are not in the same cycle. So I think that if you take them together, it will be rather flat. If you look at the recycling machines, they are driven by infrastructure projects which are high on the low economy and vice versa. So I think that we have made a very solid portfolio.
All right.
Was that your question?
No, yeah. I was just wondering your perception of the overall cyclicality of the group, but it seems that you say, well, it's quite offsetting
it's another thing
over the cycle.
I like to add to that we started the company in the worst of crisis in Lehman Brothers. That was to our advantage. Again, people like to do what they always have done. Now some of our customers, they were forced to find new ways, so that's why they came to us. So actually, the downturn economy can be good for us. That makes people change the supplier network.
Understood. Yeah. And going back to this MIG, how much is that of the group today in terms of sales, and how big is that business? And just some comments about that. You'd like a deeper dive into that because it seems very interesting.
Strategy-wise, it's very important. Revenue-wise, it's very limited. We do not charge. I met a customer who I presented this, and he said he just had ordered another kind of supply chain analysis from one of the traditional consultant firm, and I gave them our price tag, and he started laughing, and I thought, wow, I must be too expensive. But he paid 10 times as much from the other consultant firm, and the conclusion was just to reduce number of suppliers. So. It's we don't charge so much for this. It's more a way to have a dialogue with the customer and also show the benefits of doing something new.
Sure, understood. And in terms of time frame, how long does it take until you make the initial contact and you perform this MIG analysis until you're actually up and running and you deliver this to the client? I guess it depends, but in general,
it really depends. It depends. Some of the customers are really squeezed. They need to do something now from capacity point of view or financial point of view. Others, they have a long-term idea that like to grow and would like to have some ideas how to do that. So I cannot give you a general answer on that one.
In terms of once you have a client within this cluster and you're up and running, have you ever lost a client from this structure? And if so, is that because they take it in-house, or do they go to the more traditional way again? Have you ever seen that? Or
I'm proud to say that we don't lose customers. We have fired a few customers actually, but you're not allowed to leave Hanza. If you're an employee, you're not allowed to quit either. So it's a one way.
All right.
We haven't lost any big customers now.
Great,
no.
cool. Well, I think that's about all the time we have. So thank you for coming, and thank you so much.
Thank you.